Take the match. It's free money. It's a guaranteed 100% return on your investment. That is the single most repeated sentence in the history of personal finance. Your HR director says it. Your parents say it. Every guru on YouTube says it, and because everyone says it, you believe it. You blindly check the box, you contribute your 6%, and you feel smart. But what if I told you that 6% free money is actually the most expensive money you will ever touch? What if I proved to you, mathematically, that the match is not a gift, but a purchase? They are buying your compliance. They are buying your silence. And most importantly, they are buying your time at a discount. The 401k match is a golden handcuff. It is a sophisticated retention algorithm designed to keep you trapped in a job you've outgrown, investing in funds you don't control, paying fees you don't see, to build a retirement that by the time you get there might be worth half of what you think. They call it a benefit. I call it a system of control. Today, on Wealth Architect, we are going to do something dangerous. We are going to deconstruct the sacred cow of the middle class. I'm going to show you the vesting math that HR prays you never calculate. I'm going to expose the Wall Street cartel that forces you into mediocrity. And I'm going to give you the blueprint for the sovereign retirement system, the account, that allows you to fire your boss, become your own bank, and invest in real assets like real estate and crypto. Tax-free. This is the red pill for your retirement. Let's go. Welcome back. I'm Ben. Here, we don't play the game. We engineer the exit. To understand the trap, you have to understand who built it. Most people assume the 401k was carefully designed by the government to ensure your financial safety. False. It was an accident. And it was exploited by corporations to pull off the greatest heist of the 20th century. The Great Risk Shift, the pension era defined benefit. Before 1980, if you worked for General Motors or GE, you had a pension. This was a defined benefit. The company promised to pay you, say, $1 to $1,000 a month for life after you retired. Who took the risk? The company. If the stock market crashed, the company still had to pay you. If you lived to be 100, the company still had to pay you. The liability. The company had a massive weight on its balance sheet. The 401k era defined contribution. In 1978, a benefits consultant named Ted Benna found a loophole in the tax code section for 401k. Corporations realized they could replace pensions with this new thing. Who takes the risk now? You. If the market crashes the year before you retire, you lose. If you outlive your savings, you starve. The liability. The company has zero long-term liability. They wash their hands of you the day you quit. This was a massive win for corporations. But they had a problem. How do you convince employees to give up a guaranteed paycheck for life in exchange for a risky savings account? You bribe them. You say, hey, we won't guarantee your future anymore, but if you put in 5%, we'll match it. The match was the spoonful of sugar to help the poison go down. It wasn't generosity. It was a calculated cost-saving measure to dump the investment risk onto your shoulders. Now, you might say, Ben, I don't care about history. Free money is free money, is it? Let's look at the mechanism they use to control you, the vesting schedule. When they give you that match, they don't actually give it to you. They put it in a holding account. You have to earn it by staying. Cliff vesting, you get 0% until year 3. Graded vesting, you get 20% a year for 5 or 6 years. The job hop calculation, let's run the numbers. You make $100,000 a year. You get a 5% match, $5,000. You've been there 2 years. You have $10,000 in match money sitting in your account. But your vesting schedule says you are only 20% vested. If you leave today, you surrender $8,000. So you get a job offer from a competitor. They offer you $120,000. That is a $20,000 raise. But you hesitate. You think, if I leave, I lose that $8,000 in free money. Maybe I should stay another year to get vested. Path A, stay for the match. You stay 1 more year. You keep the $8,000 match. Total gain, $8,000. Path B, leave for the raise. You leave. You lose the $8,000 match, but you gain a $20,000 salary increase. Total gain, $12,000. By staying for the free money, you actually lost money. You paid $12,000 in opportunity cost to save $8,000 in match. This is why they do it. The match is a golden handcuff. In a world where the only way to get a significant raise is to switch jobs, the vesting schedule is designed to suppress your wages. It keeps you in the chair just long enough for them to extract maximum value from you, while paying you under market rates. Trap number 2 is the menu. When you put money in a 401k, you surrender your consumer sovereignty. You are no longer free to buy what you want. You can only buy what they sell. Your 401k plan administrator Fidelity, Vanguard, ADP, etc. gives you a list of 20 funds. Usually, large cap growth, small cap value, international fund, target date funds, hidden fees 12B-1. Why do they pick these funds? Often, because these funds pay kickbacks, revenue sharing, or 1-to-1 fees to the plan administrator. You might see an expense ratio of 1%. You think 1% is nothing. Let me teach you the rule of the fee in a 7% return environment. A 1% fee consumes 28% of your total lifetime returns over 40 years. If the fee is 2%, it consumes over 50% of your wealth. Half your money, gone, to pay for the privilege of having limited options, the asset class trap. But the bigger cost is what you can't buy. You can't buy a rental property in a standard 401k. You can't buy Bitcoin usually. You can't buy gold bullion. You can't invest in your friends' startup. You are forced to be a paper investor. You are feeding the Wall Street machine. They take your capital, they charge you fees, and they use your money to buy the assets they want to own. Now we get to the macroeconomic problem. The time lock. A 401k locks your money away until age 59 and a half. If you touch it early, you pay a 10% penalty plus tax. They tell you this is good discipline. I tell you it is liquidity suicide. We are entering a period of high inflation and economic volatility. The reset. In this environment, liquidity is king. You need access to capital to seize opportunities. Scenario: it's 2025. The housing market corrects. A property down the street is selling for 50 cents on the dollar. It's a cash-flowing monster. You need $50,000 down. You have to $100,000 in your 401k. Can you buy it? No, your money is trapped in a target date 2055 fund that is down 15% because bonds crashed. You are net worth rich but cash poor. The wealthy never lock up their capital for 40 years without a key. They want velocity. They want to move money from asset A to asset B as the market changes. The 401k turns you into a statue. Okay, Ben, you've scared me. What is the solution? Do I just put cash under my mattress? No, you upgrade your vehicle. There is a secret weapon in the tax code. It is designed for business owners, but almost anyone can qualify for it. It is called the Solo 401k or the Self-Directed IRA. Who qualifies? You need self-employment income and no full-time employees other than a spouse. Do you have a side hustle? Do you consult? Do you sell on eBay? Do you drive Uber? If you make $1,000 of legitimate 1099 income, you can open a Solo 401k. Why is it the architect's choice? 1. Checkbook control, the holy grail. You don't need a custodian to approve your investments. You become the trustee. You open a bank account at Chase or Wells Fargo for the trust. You want to buy that rental property. You write a check from that bank account. You want to buy gold? You write a check. You want to buy crypto? You transfer funds to an institutional exchange. You are the plan administrator. 2. Massive contribution limits in a regular job. You are capped around $23,000 in a Solo 401k because you are both the employee and the employer. You can contribute up to $69,000 per year subject to income. You can shelter massive amounts of income from taxes. 3. The mega backdoor Roth. Some Solo 401k plans allow you to put in after-tax money and convert it to Roth immediately. This means your growth on that rental property or Bitcoin is tax-free forever. Imagine buying a Bitcoin for $60,000 inside your Solo Roth for 101k. It goes to $500,000. You sell. You pay zero capital gains tax. This is how Peter Thiel built a $5 billion tax-free fortune. He didn't use a workplace plan. He used a self-directed framework. Now, I am an architect, not a zealot. There is a time to take the match. If your company offers immediate vesting, you own it day one, no strings attached. Then yes, take the match. It is an immediate 100% return, but do not put a penny more than the match percentage. Get the free money and then divert every other dollar to your own system, your brokerage, your real estate, your business, your Solo 401k closing parenthesis. Do not let the match become the anchor for your entire financial life. Treat it like a coupon, not a strategy. The 401k system is designed to create passengers. Passengers who sit quietly in the back, pay their fees, accept their limited menu, and hope the bus driver Wall Street knows where he is going. The wealth architect is a driver. We build our own vehicles. We choose our own routes. We take responsibility for the fuel and the maintenance. Yes, a solo for 101k takes more work. You have to fill out a form once a year. You have to find the investments. But the reward is sovereignty. The reward is knowing that your wealth is not dependent on a vesting schedule or a fund manager's performance. Stop building their table. Build your own. I want you to perform an audit this week. The handcuff audit. Log into your 401k. Find your vested balance versus total balance. How much money would you lose if you quit today? Find the expense ratio of your funds. Post those numbers in the comments. I'm 40% vested and paying 0.8%. Let's expose the reality. And if you want a step-by-step tutorial on exactly how to set up a solo for 101k and open that bank account, I need you to subscribe and comment solo below. If enough of you ask for it, I will build the technical guide next week. Hit the bell. Class dismissed.